Today we are going to discuss the foreign currency valuation. So this foreign currency valuation will do from the AP perspective only, and this is the business process, and this activity we carry out in the month end. In the period end, we carry out this activity. What is this foreign currency valuation? So let's find out. Here it is saying that I have taken example of the purchase. So likewise, you can take example of sale also. So what we have under this purchase, it is saying that we have the vendor and we have purchased a material, we have procured the inventory from our vendor, but we have used the foreign currency. We are doing the payment, we are procuring the material, and we are doing the payment in the foreign currency. Now it is saying that if we will be purchasing the goods and we will be doing the payment after 1 month or 2 months, so there is a gap, and due to that gap, the currency rates may fluctuate, and due to which we may get the loss or we may get also the gain. So to have that particular gain and loss, we need to carry out this foreign currency valuation. And there are two types of loss and gain we will have. So one is the unrealized gain and second is the realized gain. Likewise, we have the unrealized loss and we have the realized loss. So in the interview, you may be asked that okay, what's the difference between the unrealized gain or unrealized loss? So or unrealized gain loss or this unrealized and realized loss and the difference between unrealized and realized gain. So that is how this question is going to be. Now here, let's understand this example. I have framed one example, so I am going to share with you. So here we have created a scenario. Under that, we have done the purchase from our vendor. So this purchase we have made from our vendor last month, and it is on 21st of April. On 21st of April, we have made the purchase. So this purchase we have made in the foreign currency. So here I have taken a scenario of foreign currency. It is USD, and my local currency is INR. My local currency is INR. So likewise, we can also have the scenario that in our case it is the company code currencies or our local currency is USD. So we can have the foreign currency. It may be GBP, Euro, or it could be anything. Now here we need to understand the concept. What is the logic behind it? So here it is saying that we have made a purchase, and this purchase we have made in the foreign currency, and it is 1 USD. So here it is saying that the rate on 21st of April, so the rate is 1 USD is equal to 65 INR. So whatever the purchase we have made on 21st of April, it is $100. It is $100, so it is going to be 6500 INR. So my local currency amount is 6500 INR. And here you can just see we have credited the vendor with how much amount? With 6500 amount. Now let's take this example that we have purchased a material from the vendor with amount 6500 INR, and it is saying that as per the terms of payment we need to pay this vendor next month. Let's say in the May month we need to pay this vendor, but before the May month we have the month end. We have a month end of April, and under that month end we need to close our books. We need to show our liability that these are the liabilities we have in our books as on 30th of April. So the rate which we have taken on 21st, so that same rate we can't take it on the 30th. Why? Because we will be taking the rate which is valid for 30th. So whatever the rate which is applicable for 30th of April, that rate we will be taking into the account. So the rate which at which we have made the purchase at that point of time, the rate for 1 USD it was 65 INR. But when we are going to close our books on the month end, when we are going to close our books, now the rate got up, so it is now 68. So now 1 USD is equal to 68. So we are getting a loss of, we need to pay 300 more. We need to pay three more. So I need to pay 3 rupees more for every dollar. And here it is saying that now if I will be showing my liability as on 30th of April, so it is going to be 6800. It is going to be 6800, and that purchase which we have made, it is with the amount 6500. So we are getting a loss, and that loss is of amount, it is 65, it is of amount 300. This is a loss we are getting on the month end, but it is not a actual loss. It is not a actual loss. This is the loss. We are just declaring it to in order to close our books. So when our books will be closed and we will have the next one, so again we are going to reverse this entry. This is not going to end the transaction. It is not going to complete your transaction, which transaction you have made, that is the purchase transaction. So when it is going to be completed, when you will be doing the payment, then this transaction will get completed. So before that, it is a incomplete transaction, and that is the reason it will remain in the system. It will remain in the system until unless you do the payment. So now it is saying that on the month end, we have realized that we are getting a loss and it is of amount 300. So what will happen? So system is going to make a accounting entry, and this accounting entry you can remember it is here we have taken a scenario of loss. Same way you can also take a scenario of gain. So in case of loss, we are going to debit the unrealized loss account due to the foreign currency valuation to the balance sheet adjustment account. In case of gain, what will happen? So the balance sheet adjustment account will be debited and your unrealized gain account will be created. That is the entry which is going to be happen if in case we are getting a gain. Now, here this is the loss and this is the entry we have passed on the month end. But it is saying that since it is not a actual loss, this is the loss, we are just declaring it in the books in order to close our books. So here this is not going to clear your vendor open item. This is not going to clear your vendor open item, and it is saying that it is a notional loss. It is a notional foreign currency loss. It is not a actual loss. So what we need to do? We need to do the reversal. When we are going to do the reversal, we'll do the reversal on next month, or I would say, so this reversal will be doing on the first of next month. On first of next month, we'll be doing the reversal. So for example, this is the foreign currency valuation we have made on 30th of April. That is the reason we need to do the reversal on 1st of May. And the same thing, if we would have happened, if we would have done on 31st of May, then the reversal we would have done on 1st of June. So this is something which needs to be which needs to be continue every month, which needs to happen on every month end. So it will be done until unless we do the actual payment. Until unless we do the actual payment. So it is saying that whatever the entry you have passed and it is related to the unrealized loss account to the balance sheet account. So the same entry system is going to reverse on 1st of May, and this entry is going to be balance sheet adjustment account debit to the unrealized loss gain account, unrealized loss account I would say, and it is with the same amount. Then it is saying that now in the month of May, we are now going to pay to this vendor. We'll be doing the payment to this vendor. When we are going to pay this vendor, we'll be doing the payment to this vendor on 7th of May. On 7th of May, we are going to pay to this vendor. Then at that point of time, at that point of time on 7th of November, oh, sorry, on 7th of May, we have we have confirmed the rate is for one USD is equal to $70. So again the rate got increased, and here we can have a difference of 7,000 minus 6,500. So this is the 500 difference we have, and that is the actual loss we have. So here you can just see this is the vendor account which we have at the time of purchase. We have credited with how much amount? With the 6,500 amount. The same amount we'll be taking when we are going to do the payment. So this is the vendor which we are debiting with amount 6,500, and remaining 500 you will take it under the loss due to the foreign currency valuation. And from the bank, how much payment you have to release now? You have to release 7,000. So this is how this system is going to clear your vendor open item. Okay, fine. Now it is saying that when we are going to do this activity, so one time we need to set up the configuration for the foreign currency valuation. And for this, what we need to do, first of all, we need to create the GL. We need to create the GL. So first GL we have already created. It is a reconciliation account. Actually, here we have taken a scenario of purchase. Likewise, you will have the foreign currency valuation you need to do for your customer. So in the customer, what will happen? So for example, when you have made the sale, so the rate was different. And when you are going to close the books, then the rate is different and you will be closing your books for your customer with the higher rate or whatever the rate we have on the month end. And the same entry will get reversed. And when you are going to actually receive the payment from your customer, So at that point of time, whatever the actual loss or gain you will have, so that loss or gain you are going to debit or credit. So in case of a gain, it is going to be credited. In case of loss, it is going to be debited. So here we are debiting the vendor in case that we are getting the payment from the customer. In that case, you are going to credit the customer. So that is what it is going to be. So here we are creating the bank account. In that case, we are receiving the payment from in the bank. So we will be debiting the bank. That is the only difference we have. Actually, in the interview, if they will ask you about the foreign currency valuation, so you can give the same example of account payable. Okay. Now, for this account, for this foreign currency valuation, we need to create the GL. So first GL we have already created. It is a vendor reconciliation account. So this is the supplier reconciliation account we have already set up. Then we will be creating some more GL. So these are the GL we have for the foreign currency valuation. So we have gain account and loss account. Again, gain account will create two types of gain account. One is the realized and second is the unrealized. Same is with the loss account. We'll be getting two loss account. One is the realized and second is the unrealized. And we will be also creating a balance sheet adjustment account which we'll be using for the month end activity, which we will be using for the month end foreign currency valuation activity. Okay. Now let's use it. We'll go into the system and we'll do the configuration for the foreign currency valuation. Yeah, this is the monthly activity. Okay. And if somebody will also ask you, okay, what are the month end activities we have? So this is one of them. Now here it is saying that let's create the GL. So for the GL creation, we can go to the GL master data. Transaction code is FS00. Let's have the transaction code FS00. So this reconciliation account we have already in the system for the company code 2184. This we don't need to create it again. Now the next GL we will be getting it is the gain account. So for the gain account we can create a two gain account. One is the realized and another is the unrealized. So here we have the gain account. Let it be the gain account GL we have it is 300,101, and we can take the okay we can create it from the beginning only. Go to the new entry. We can take the account group as income, type as P&L. We can give the name as this is the unrealized gain on foreign currency valuation. FCV means foreign currency valuation. Unrealized gain account we have for the foreign currency valuation. We can go to the control data, select only balance in local currency, select line item display, sort key is going to be it is posting date, and then we can give the bank interest type as G01 and I'm going to save it. So this is the unrealized. Now the next I'm going to create it is for the realize. And for the realize, what we can do, we can copy the setting from the GL. We have already created it is 300,101 in the same company code 2184. So I'm going to change the name. So this is the actual one. It is the realized one. Realized gain we have due to the foreign currency valuation, whatever the gain we have. So that is the realized. Likewise, I'm going to create the loss account. So the GL I'm going to create it is 400,101, and we can take the reference from 300,101. I need to change the account group because it is expense account group. Type is going to be same, and here in case of unrealized gain, we'll take here unrealized loss account, unrealized loss account due to the foreign currency valuation. And after that, I'm going to save it. Next GL I will be creating this is the actual loss. And for the actual loss, again, we can take the reference of 400,101. So this is my actual loss. And after that, I'm going to save. So here we need to create one more GL that is the balance sheet adjustment account. So this is going to be like similar to your cash or bank account. So we'll create this with the reference to the 200,101 in the same company code 2184. We can give the name as balance sheet. This will be using every month balance sheet adjustment account, balance sheet adjustment account for the foreign currency valuation. for foreign currency valuation account. So these are the GLs we have created. Now we need to assign them. But before we go for the assignment, we need to have some basic setting. So first of all, we need to define the accounting principle. We need to understand what is the accounting principle. Actually, we know that when we are setting up any company code, ultimately we are going to maintain our books. We'll be maintaining the books of account, and the books of account is nothing but your financials. So financials are nothing but your profit and loss statement, balance sheet. So these financials we maintain for any company code. Now it is saying that for because nowadays we need to do the reporting, we need to do the valuation for our financial according to the different accounting standards. So let's say we have a company in US. So we want to also get that company listed in some other country. For that, we need to also follow the accounting standard in that particular country. So for the same company code, we need to follow various accounting principles. We need to follow various accounting standards. So these accounting standard could be the US GAAP, IFRS, Indian Accounting Standard, or International Accounting Standard. We have the local GAAP. We also need to maintain our books according to some statutory audit in a particular country. We need to also maintain our books according to the tax calculation for a particular country. So these reason, if we are maintaining the multiple valuations, then we need to follow the parallel accounting. Because under the parallel accounting, we can maintain parallel valuation. So here it is saying that we are going to first define the accounting principle. So how we can do it? Let's find out. We have the step number 2. We have been given the path. It is saying that you need to go to the financial accounting new, then you need to go to the global setting, and we can go for the parallel ledger accounting. So here I'm going to follow the path. Go to the SPRO, financial accounting, global setting, new, ledger. Under the ledger, you will find the parallel accounting. And here we have the first step as define the accounting principle. Define the accounting principle. Click on this. This accounting principle we can define in the system or to the four character could be alphanumeric. So we can click on the new entry button and we can define the accounting principle ID. It is let's say 2184. This is similar to my company code ID. And this is the ID we have maintained for the US GAAP accounting principle we have for 2184. Then I'm going to press enter button, save it. And this accounting principle we are going to assign with the leading ledger, or I would say ledger group. So for this, we have the next step. So assign the accounting principle to the ledger group. Click on this. We can click on the new entry button. Click on the new entry button. What's your accounting principle ID? It is 2184. And what is your target ledger group? So our target ledger group is it is standard. It is going to be 0L. For the leading ledger, we use the standard ledger group ID, which is 0L. It is going to be same in all the system. So I'm going to assign my accounting principle to the ledger group. It is 0L leading ledger. With this, I'm going to save it. Click on the save option. And after that, it is saying that for the foreign currency valuation, we need to go to the valuation method. We need to define the valuation method, valuation area. So where you will find all these objects. So here we can go to the, we'll go back, click on the back option and come out of this ledger and financial accounting new. Now you need to go to the general ledger accounting new. And under the general ledger accounting, as I just shared with you, it is a monthly task. It is a monthly activity. It is a periodic activity. So we'll go to the periodic processing. And under the processing, what we are going to do, we will be doing the valuation. So for this reason, we'll go to the option valuate. And here you will find the option as valuation method, valuation area, assignment of your accounting principle to the ledger group, then assignment of valuation area to the accounting principle, and last we can assign the GL for the account determination. So first we'll start with the valuation method. Click on the valuation method and we can click on the new entry button. Click on the new entry button. So here I'm going to select the option as always evaluate whether we are getting the loss or gain. So system should do the valuation. And for this, we need to define the valuation method. So let's have the valuation method as 2184. Then we can define this valuation method for 2184. This is the description we have maintained. And after that, you can just see it is asking for the document type for this foreign currency valuation posting. So the document type I'm going to have it is the SA document type GL accounting. GL document type will have here. Then here it is saying that which exchange rate type you want to use for your foreign currency valuation. So I want to use my exchange rate type. It is 8484 for the debit as well as for the credit transaction. Now I'm going to press enter button and I'm going to save it. Click on the save option, then enter. We can go back and this valuation method we can assign with the valuation area. We can click on the valuation area and we can define this valuation area up to the 2 character could be alphanumeric, and this valuation area we can later assign to the currency type. So we can click on the new entry button and our valuation area I'm going to maintain as 84. Valuation method we have already defined as it is 2184, and the currency type I'm going to maintain it is the company code currency. Company code currency. So this is the setup we have maintained over here. After that you can press enter button and then save it. Then this is just a informative message, or I would say a step where we need to check the information. We don't need to do anything. So here, if you remember, we have done the assignment of our accounting principle to the ledger. So this is what we need to check in this step. Nothing else we need to do it here. Only the checking we will be doing. And that is the reason you can see here the step is also saying that check the assignment. Not we will be doing anything here. Now the next thing is assign the valuation area and accounting principle. For this, we can click on the new entry button. What is our valuation area? 84. What is the accounting principle we are going to follow? 2184. And then we can save it. Press enter button, save it, and then we can go back. Go back. Then we can go to the foreign currency valuation. Here you will have the option as prepare the account posting for the foreign currency valuation. Prepare the automatic posting. So here we will be assigning the GL for the automatic posting. Click on this. Under this, we have been given the transaction. So we'll go to the foreign currency. For the foreign currency open item or the GL item, we'll go to the option KDF. Double click on the transaction KDF. It is going to show you your chart of account ID, which is C84. Now remember one thing, when we are assigning our GL, we are assigning our GL. So in this foreign currency valuation also, with this assignment, we are doing at which level? At a chart of account level. That is the reason system is asking for your chart of account. Otherwise, system would have asked for your company code. And maybe this is the question you will be asked in the interview that, okay, the assignment of GL in the foreign currency valuation, we do it at which level? At a chart of account level or at a company code level? So the answer is chart of account level. The answer is chart of account level. At a chart of account level, we are going to do the assignment of our GL for the foreign currency valuation. So here I'm going to press the enter button. Now I'm going to click on the new entry button. My GL is going to be 100 500, and then we are maintaining this currency and currency type field as blank. Then after that, you can just see we have the section for the exchange rate difference realize. So this is the loss gain which we have realized, and then for the valuation we have the unrealized. Valuation we have for the loss gain, that is the unrealized. So here for the loss and gain, that is the realized one. It is for the loss we have the GL. It is 400,302, 400,302, and gain we have taken as 300,102. 300,102. Foreign currency valuation when we are doing, so we have the GL, it is 400. Let me just confirm the GL also. I think it is 400,101. Let me just check the GL also. It is 400,101. So you can just see this is the unrealized one. And here we will be giving the information. So we have the 102. So you can just see this is the realized loss, and we have the 102, 300, 102. This is the utilized gain. So these GLs are correct. Then we'll go to the next GL assignment. The GL is going to be 400, 101. 400, 101. Is 400, 101. So this is the unrealized loss. Then For the gain, we have the GL, it is 300,101. And for the balance sheet adjustment account, we have the GL as 200,105. So this is a GL account assignment we have done. And after that, we are going to save it. Click on the save option. And then we can come out of here. So now we are done with the configuration. So we need to do the testing. But before we go for the testing, so I'll just walk you through the foreign currency exchange rate table we have, and we can go to the transaction code. It is OB08. The exchange rate, the exchange rate type which we are using, it is 84. Exchange rate type we are using, it is 84. Now you can see here we have the rate for the May month. So I'm going to take the rate for the April month also, because we are taking here a scenario of April month foreign currency valuation. So here I'm going to take the rate, it is Euro and USD, and the date I'm going to take, it is, let's say, on 21st of April we have made the purchase, and rate at that point of time it was 1.33. 1.33. Enter. Click on the maintain button, and we also have the month end. On 30th of April we also need to maintain the rate, because at that point of time we have done the foreign currency valuation. So let's have it the date as 30th of April. 30th of April, and the rate is going to be, it is 0. It is, can take any date. Let it be the rate as 445. Okay. So this is the rate I'm taking. On the month end, it is 1.45. Earlier rate was 1.33. Now it is 1.45. Okay. Okay. So these are the three rates we have. So we are assuming that we have made a purchase on 21st of April, then we have done the foreign currency valuation on the month end, and we have done the actual payment to the vendor on 19th of May. So that is the scenario we'll go with. Okay, so we'll change the rate on 19th of May, because we'll have the variance. Okay, so through that variance we'll understand what is the difference. So this is the rate we have maintained. Now I'm going to save it. Click on the save option. Click on the save option. And one more thing we need to do. What is that? So you know that when we will be doing the purchase and when we will be doing the payment, so we'll have one particular document. We'll be using a particular document type. So for the purchase, we use the document type KR, which we use for the purchase invoice. So it should have the relevant exchange rate type. Likewise, when we are going to do the payment, so at the time of payment, which document type system gives us? System gives us the document type KZ. So this KZ also should have the relevant exchange rate type assigned. And how we can check it? For this, we'll go to the transaction code OBA7. First, we'll have the document type as KR, and after that, we can go to the detail of it. Click on the detail button. So you can just see here the exchange rate type we have assigned. It is M, that is the average rate. So I'm going to remove it and I'll assign here 84. I'll assign here 84. And the same thing I will be doing for my vendor payment. And for that, we are using the document type as KZ. So here I'm going to assign 84. 84, and I'm going to save it. I'm going to save it. Now let's have the purchase, and this purchase we have made on 21st of April, 21st of April in the foreign currency euro, in the company code 2184. So what's the vendor number? Vendor number is 201, and here it is saying that you are doing a posting in the previous month. Okay, we can ignore this message. Amount we have in the euro, it is 1000, and then we can give the text as this is a purchase in foreign currency. 40 we can take for the raw material consumption account, and then we can give the amount for the second item as 1000 or star. Here we will be giving the value date as 21st of April for both the line item. So you can observe here this first line item. So it is having the amount, it is having the baseline date as 21st of April. Now this is the rate, you can just see system has picked, it is 1.33. So I'll also show you that rate we have stored in the exchange rate table. is with the transaction code OB08. We have the exchange rate type as 84. So here we can check here on 21st of April. So system has taken the rate as 1.33. Accordingly, you can just see here we have the amount as 1330. We are going to have the amount in USD, it is 1330. So with this, we are going to create the vendor. The vendor is, this is 201 LG Electronic. We have created with the amount 1330. So I'm going to save it. Click on the save option. Now the month end has come. On the month end, we have done the revaluation. So on the month end, we have realized that so the rate is now 1.45. So this is a loss because the rate got increased. So this is a unrealized loss that system is going to post. So how the system is going to post, what are the accounting entry system will give us. So let's find out. So for this foreign currency valuation, we use a transaction code. It is FAGL underscore FC underscore val. So that transaction code we are going to use here. It is step number 4, foreign currency valuation, and the transaction code is FAGL underscore FC underscore val. Use this transaction code. Company code ID is 2184. When you want to do the foreign currency valuation, so you can just see by default system has taken the previous month last date. System has taken the last date of previous month. Why? Because we are in the month of May, so system is assuming that we are doing the foreign currency valuation for the previous month. So if you will be in the month of June, then system is going to show you the month and the foreign currency key date, the valuation key date as 31st of May. So that is how it operates, it works. Now here we are going with the foreign currency valuation key date as 30th of April, and then we will have the valuation area which is 84. 84, and after that you can just see we have been given the tabs as posting tab, open item tab, balance, GL balances. So we'll go first to the open item tab. We'll go to the open item tab, and here we can select the checkbox vendor open item. Select the checkbox evaluate vendor open item, and after that we'll be mentioning here the reconciliation account number. It is 100 500 for which you want to do the foreign currency valuation. In case there are multiple, then in that case you can give the range. You can also have here multiple selection where you can give the selected foreign currency. You can assign the selected, mention the selected reconciliation account. So in our case, we are going to take it as single. It is 100 500, and after that I'm going to click on the execute button. Click on the execute button. So you can just see here system has taken the account type as K, that is for vendor. GL as 100 500. This is the reconciliation account number we have taken for the vendor 201, and it is saying that based on the document you have posted with the document number 81007. So I'll just show you this document number 81007. Go to the vendor open item. How to check the vendor open item? So we can go to the FBL1N. Vendor number is 201. In the company code 2184. So let's find out the open item. You can see here we have an open item of 1330. You can observe here the document number as 81007. So this is the same document system is just showing you here that the document number system has taken into the account. It is 81007, and it is saying that it has been posted in the foreign currency euro. So if we calculate the amount into the local currency, it is going to be 1330 at the time of purchase. But when we are going to close our books, so the rate is 1.45. So accordingly, we are getting a loss. We are getting a loss. So this loss is going to be 120. 120. So if you want to post this new difference, if US, then you go for the posting. So you can just see here, you can also observe here the two posting system is going to give you, and system will post into a system. If the system will not show you that posting and it will give you here the red signal, it means that your configuration is somewhere it is not correct, or you're not doing the correct texting. So here we can see the posting system is just showing you, which means that the configuration and testing is fine. We can check the accounting entry. So you can click on the to posting. So you can just see this is the accounting entry, which you may be asked that, okay, what is the accounting entry system is going to do on the foreign currency valuation run. So on valuation run, system is going to post these two accounting entry. First you can just see this is the unrealized loss account system has debited to your balance sheet adjustment account. And you can see here the text, it is the valuation we have made on 30th of April, and the same valuation we have done the reversal on 1st of May. You can observe here the date it is for the valuation. We have the date as 30th of April, but when we are going to do the reversal, the date is 1st of May. So it is saying that although we will be having the entry on 30th of April, but the reversal system is going to do it on 1st of May. So if you are okay with this, then we can just go back and we can post it. How you can get it posted? So for that, you need to click on the option, that is the create option under the posting tab. You need to click on the create posting, and after that you can mention here your batch input session. So my batch input session is April FCV foreign currency valuation, and I'm going to execute it. Click on the execute button, and in the menu you need to go to the system services and batch input. So I'm going to create a session for this, and then I will execute. When you are going to execute, so we'll select the option as a display error. If there would be any error in the line item, system will take us to that line item. So it is saying that the session is completed, no error found. So we can exit the batch input session, and we can go to the FSTNN. So we have the balance sheet adjustment account 200 105 105. So you can just see here company code is 21. Here you can just see the entry we have posted on 30th of April, and the same entry system has done the reversal on 1st of May, and that is the reason it is coming in the fifth period. So let's see this entry we have posted in the month end. And if you want to see the complete entry, so this is the document which system has posted. If you want to see the complete entry, you can go to the document overview. So this is a complete entry. We can just see it is the unrealized loss account debit to the balance sheet adjustment account, and you can just see amount is coming as zero. Why it is coming zero? Because this is the amount we are checking in the foreign currency. As I just shared with you, whenever there would be any loss gain due to the foreign currency valuation, so it has to be in the local currency. So we can click on the display currency, and it will just show you the loss we have incurred here. It is the unrealized loss we have incurred here. It is 120 USD, and the balance sheet adjustment account has been created. Now the same entry you can observe here. This is the entry system is going to reverse on 1st of May. Let's see. So I'm going to show you the second entry which we have on the in the month of May. So this is the entry we have, and once again we can see this entry complete document. I'm going to show you both the line item. So you can just see the system has done the reversal. So it is saying that 50. Normally here we have 40/50, but here we have 50/40, and I'm going to show you the amount as well. It is 120 minus. Okay, so this is the reversal. And if you just see the posting date, it is coming as 1st of April, 1st of sorry May. So this is the reversal system has made on 1st of May. So this is the practice which we will keep doing every month until unless we do the payment to the vendor. So once we have done the payment to the vendor, so this transaction is going to be closed, then we will not do this activity. For example, if you just see with this exercise, so if our line item got cleared, answer is no. It will remain in the system, and how long it will remain in the system? Until unless you do the payment for this. So once you have done the payment at that point of time, whatever the loss gain you have, that would be the final, that would be the actual, and after that, it is going to be closed. This transaction is going to be closed. So that is the idea of, that is the logic of this foreign currency valuation. So I'm going to do the payment, and after that we can observe the line item. And the payment I'm going to make it on 19th of May. So this is what we have decided, that on 19th of May we are going to pay to the vendor, and the rate at that point of time it is 1.77. So let's go for the payment, and this payment we can process with transaction code F-53. We have the date as we have the date as 19th of May 19th of May 2020, and we have made this purchase, we have made this payment in euro, and the bank account GL we have 200,101. Amount we have paid to the vendor, it is 1000 1000 euro, and this is a payment we have made in foreign currency to the vendor NV201, and we can press enter button. So before you do the posting, you can just see the not assigned is 0. So we can go for the save option. But before you go for the posting, you can go to the menu document and then you can click on the simulate button. You can click on the simulate button. Now you can just see system is saying that we are getting a loss, but here you can just see it is coming in euro. So let it be in the currency local. And in the local currency, you can just see we are getting a loss of 440. Why for 440? Because at the time of purchase, you can just compare these two transactions. At the time of purchase, we have the purchase with amount 1330, and when we are going to do the payment, the amount is for 1770. The amount is 7070. So there is a gap of 440 which system has taken to the realized loss account. So if you want to do the posting, then we can click on the document overview. So from the bank, how much payment you need to release? You need to release the payment in the local currency 70. But this vendor you have debited with amount you have at the time of purchase. You have credited this vendor with amount 1330. And when you are going to debit, so it is going to be same 1330, but the remaining amount will go to either loss account or gain account. So here we have taken the scenario that is the loss. So that is the reason we are posting it to the loss account. I'm going to save this entry. So this is the final entry which is going to clear your line item, and after that foreign currency valuation for this transaction is not required. So here I will just show this entry after this payment. So I'm going to refresh. So you can just see no item is there. Why? Because it got cleared. Let's check the cleared item with amount 1330. So here we can check the amount 1330. You can see here 1330, and this payment we have made it on 19th of May. So let's check this document. Go to the document. So here it is saying that the payment amount in euro it is 1000. If I just show you the complete entry, so it will show you the loss. And if we just check the loss in the local currency, it is going to be 440. You can observe here the transaction key, it is showing you KDF because under the KDF we have assigned the loss gain account. Okay.